Hey traders, it's Leaf West, and I'm going to talk about the spider today. Um, some interesting things happened. I came into the day short and actually covered two-thirds of my holdings before the market opened in the regular hours, and then made a little bit more by holding on and seeing if the market would flush a little bit. I think when I set my stop before the market regular hours opened, I set it at 125.60, which was just above where the market was indicating it was going to trade coming into the regular hours. And my thought was that if we pushed higher, I'd get stopped out, and I wouldn't give up much by trying to see if the market could extend lower. And sometimes what happens is the market gets some retail pushing lower, and price will give you a bit of action. So, and my target was for the support to come in at 124.65, which I know I wrote a couple blogs on this, and the what I should have really told people last night was the real 50% retracement support for the structure to keep symmetry was actually 124.09. And I didn't do that because, long story short, I didn't want to introduce a new concept to people when I was blogging, because I didn't want to make the blog longer than it had to be. So we used the last wave, which was putting 50% at 124.65. And to make a long story short, that's what happened. And actually, I was looking at that area to actually be support. So it's not that I was telling you one thing and doing another thing. And I actually started shorting at that level. And let me put up the 1 minute chart, because this is where the day sort of starts for me on the spider. So here's the 1 minute chart at the beginning of the day. The market opens, and for the first half hour, price chops around. It doesn't know what it wants to do. The jobs number wasn't either so bad or so good that it would drive the market one way or the other way. European news was nothing really, so again, that didn't cause action right out of the gate to be one-sided. But eventually, we had people realizing, let's take some profits, or people were scared of the gap, that it wasn't going higher, so that they thought they should get out. And so we pushed lower, and I covered lower in this range, and so I was glad I kept that last third of my short. So when we got to so when we broke the open range, we make a low and we push up. So that does a couple things. One, it stops before it gets back in the open range. So you know that when it rolls over, if you wanted it to, you could short that, and you should hopefully at least make a new low. But I was looking for support at 124.65, so there wasn't really much below this low. Actually, this low was at roughly 124.72. So if you thought support was coming in at around 65, that wasn't enough to excite you to short. But for people who weren't really focusing on support, that's what you can do when price breaks the open range, comes back up and fails and rolls over. The trade is to get short there. But I was already short, so I was actually looking to cover. So let me put what you can do is you can measure this first wave and extend out the target for where you think the next wave is going to end. And that's what I did. So hang on one sec. So here's that extension. So a couple things. One is that it's actually lower than my 124.65 major support level. And when you have a major support level versus a wave target, the major support level should always rule. It should always be the stronger level that comes into play. So even though I had this there, I was going to try and see if 65 was going to hold, and it looked at the start that it may be going to do that. So actually, that's why I started to piece into my long position there. And I bought at three different levels, and I set my stop at 124.05 for the whole piece. And I want to talk a bit about why I did that. I, One was that, well, 124.05 was below this projected target range, so that was, giving myself lots of room for this range to actually be the low. Second, it was below this white line, which was a Fibonacci support level based on the opening range, which was at 124.16. So it was a full 10 cents below that. But the one thing that I didn't do, and I knew I was very conscious of at the time, was that round numbers are magnets. They're huge magnets for whatever reason. But when price gets towards a round number, it seems like it always wants to go there and at least touch it or break through it. So I was setting my stop at 124.05, fully knowing that the 124 round number could draw price through the Fibonacci support, through this projection wave to 124 before it actually made a bottom and reversed. And actually, the 124.09 level was the actual Fibonacci support level I was looking for on a bigger time scale. So um, it was so close to 124 that I should not have made my stop at 124.05, but I didn't. I was already starting at 124.65 on the long, so I did not want to make my stop so big that it caused me a bit of pain. But to make a long story short, I put it there knowing that if price came down and actually found support at the round number, that I was willing to get long again relatively quickly. And as it turned out, I did. I got long again right near this Fibonacci level when price came off of the 124 level. It made a low of 124.01 and bounced. I went long again. I think I got in at 124.15. So I got in roughly at the Fibonacci level, and which is earlier than you would on a key reversal play. But with all those levels of support that were meaningful to me, that I thought that was a trade worth getting long again and not waiting to see if it was going to work out or not. And so let me put up that Fibonacci grid I put on this key reversal point. I actually tweeted, and I may even blog, but I tweeted for sure a picture of that grid so people following me on StockTwits and Twitter could see it. So hang on one sec. So here is that Fibonacci grid, and so I got in, wasn't a couple candles past the low, and was watching price and was making comments along the way in StockTwits and Twitter that price was doing what it should have done. It got above the 61.8, went up into the gap and was showing lots of candles there. The one thing though that it was doing was it was creating upper legs above the pattern, the breakout of the pattern, and so it was showing that it couldn't get through that level. So that's okay for a little bit, but after you pull down, if you come back up and you can't even close outside the pattern, to me that's a sure sign of weakness. And actually, I sold my long, and I think I got what did I get? I think I got around 55 cents. I don't remember, but it was. I remember it was this candle right here that I decided could not get above, when the body could not get above that top end of the range or the pattern, that I was going to sell and then watch what happened on price. And so price pulled back relatively quickly, made one more attempt, only closed outside the pattern once, and then pulled down even harder. And you can keep these patterns up, any kind of contraction pattern or key reversal pattern up, until there's a new pattern to look at, because it can take a while to work its way out. So it did come down to 38.2 and bounce up and show that it wasn't really willing to sell and make a new low. So that was a positive. So if people were willing to trade the spider all day, they could have kept this grid up for a while and trade off that. But let me show you this next thing. These next couple of snapshots are actually what I blogged about today, and in that after we had right here is where I bailed on the reversal trade, and we ended up correcting down, and we made another push higher. So nothing had been proven yet. We actually what this picture does, it measures a projected end for this second up leg based on the first one, and all it could really be is an ABC off of the low, and we could have rolled over and made new lows. So that was one of the questions I had. And then, hang on. And I said in my blog posting or tweet, whatever I did, I can't remember, I think it was a blog, that we were also at, when you looked at it, we were at sort of 78.6 level. So really, it was at a key sort of level of either it was going to hit resistance here and possibly sell off and make meaningful attempts to go lower, or something else was happening. So hang on again. So this picture that I blogged it's an important one, because it really, I caught it at a sort of crux of either the market was going to sell off and we were going to head lower and we are going to be able to make money on a short trade, or it was going to show us that, you know what, this second big wave that we had in the morning, it was going to find support at the key levels. If you can see this, the retracement grid on this bigger wave, we bounced off sort of the 50%, 61.8% level. And to me, if we break, and then if you measure the wave down and put a retracement grid on that, if we break the 61 and the 78.6 level on the way up, that shows that the market has strengthened. It wants to go higher. But if we broke the 61.8 and the 78.6 on the bottom side, that showed you that was the direction of the market. And as it turned out, we broke the upper leg. And let me show you that. So that level that we broke on the upside was right in the sort of confluence of all these moving averages and of the weighted average moving price for the day. And so again, once you get above moving averages, that's a positive bullish sign. So you should be trying to make money on the long end of things. And so once we did that, I put up another wave calculation based on this first wave, and you can see that. Actually, what I wanted to point out in this is that the grids go more than just these first couple. The 2.618 level is often the end. If you do it off the first wave, the 2.618 level is often a magnet or a level that the whole wave will end at. And the projection based on the first wave was 125.71, and the high of the day was 125.70. So again, these projections and grids that I have up give you confidence. They don't always work. They're not magic. They just give you confidence that that computer trading nowadays, being the way that it is, that these levels can be important resistance and support, and you should use them in helping you trade better. And so in the end, that's what happened for the day. And I did another trade in the spiders on an open range trade, but this video is already at 12 minutes, so I can't really go into that. So next video I'll try and do an open range trade or some other teaching point. So have a good weekend. Might post some videos on the weekend, so stay in touch. All right, thanks, bye.